Stock surge on Wall Street with the Dow and the S&P 500 hitting record highs. The Nasdaq also surges 2.5% as stocks continue to surge following the Fed's outsized rate cut and strong unemployment data. Stocks in the Asia Pacific are also trading largely higher following a strong close on Wall Street. China has left benchmark lending rates unchanged, while the GIFT Nifty is implying a positive start for our own markets. Crude prices continue to rebound with Brent now hitting $74 a barrel following the Fed's rate cut and rising tensions in West Asia. Gold prices are also ticking higher following the rate cut from the Fed. Israeli warplanes carry out dozens of strikes across southern Lebanon, hours after Hezbollah leader Nasrallah threatens tough retribution for attacks which targeted the group via exploding pagers and walkie-talkies. The RBI has lifted curbs on the gold loan business of IFL Finance effective yesterday. The company can now resume sanctioning gold loans in compliance with rules and regulations. It's the final trading day of the week, and we are here on Power Breakfast on CNBC TV18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets have started off, and it is a very positive start across the Asian screen after that solid handover that we received from Wall Street. The Japanese indices were leading the gains yesterday. They're leading the gains today as well. The Hang Seng is up 0.7%. The Taiwanese index is up over 1% in today's trading session. The Hang Seng too, as we mentioned, is trading with gains. The Japanese indices, the Nikkei, is up 2% as we speak. Gains coming in from South Korea as well. The Kospi is trading with gains of close to 1%. And the Shanghai Composite is the one, the underperformer, trading slightly below the flat line this morning. But overall, the Asian screen looks very positive. Pull up the GIFT Nifty as well, and that will give you an idea of how the Indian markets are likely to start off. 51 points in the green is what the implied open is suggesting as of now. So a positive start likely for the Indian markets as well, considering the strong handover from Wall Street and positive cues from Asia. Now over to the US markets then, where Wall Street ended higher after that 50 bips cut from the Fed. The S&P 500 gained over 1.5%, closed above the 5,700 mark, and the Dow Jones also rose 500 points, posting its first ever close above the mark of 42,000. The tech-heavy Nasdaq also rose 2.5%. CNBC Seema Modi gets us a wrap of all the action on Wall Street.
Markets rallied across the major indexes after yesterday's half-point interest rate cut by the Federal Reserve, with the Dow and S&P hitting all-time highs, and the Nasdaq surging almost 3%. The Dow up 522, the S&P 500 closed up 95 points, and the tech-heavy Nasdaq up 441. The National Association of Realtors reported today that sales of previously owned homes last month hit the slowest annual pace in nearly a year, as a decline in mortgage rates failed to overcome record high prices in the market. That mortgage rate decline continuing last week. According to Freddie Mac, the rate on a 30-year fixed mortgage was 6.09% last week. And despite the interest rate cut, mortgage rates were actually up fractionally today, as the two are not directly linked. In other news, Amazon announcing a new generative AI tool. It's a virtual assistant called Amelia, and the e-commerce giant says it can offer to help sellers on the platform by investigating account issues, and includes plans for the future where Amelia is able to file claims and other documents to cut down on seller paperwork. Amazon says the software that powers Amelia isn't trained on seller-specific data, and that is a story Wall Street will be watching. That's what's happening here in the U.S. Back over to you in Mumbai.
Let's also now listen into some important reactions coming in on the Fed's interest rate cut decision and what comes next for the central bank.
While they say the risks are balanced, I think you're correct. And 50 strikes me as acting as though they put a little bit more weight on the unemployment side of things. I do not think yet that they're in panic mode, so I don't think this was an emergency 50. But he said something else that was really important. It was a very strong start, and he very much was clear that, quote, he didn't want to fall behind. So I believe this one is a little bit more in the camp of, okay, we say the risks are balanced, but it's really the labor market that we're looking at. So far, so good, but let's jump ahead of this.
If I'm looking at the futures market, and by the way, I think right now the Fed dot plot is in almost complete sync once you make that risk premium correction with 25 basis points, not 50. I mean, clearly, if the data gets really bad over the next few months, we will get some 50s. But right now, they will be happy 25 at the, November, 25 at December, and then in each of the first 4 meetings of next year, you do another 25 at each of those. That's all you need to get 200 basis points. That brings you down to 3.3%.
We saw yesterday the Fed pivoting pretty obviously towards a more future-oriented approach to monetary policy. Now, as Chair Powell said yesterday, they're trying to look forward and to avoid a slowing labor market turning into a deteriorating labor market. So that's number one. Number two, a lot of people, myself included, rather thought that the first cut in July, in my case in June, would have been appropriate. And so I think in some respects, the 50 basis points was an acknowledgement of that and a bit of catching up. Obviously, Chair Powell wasn't going to say we're behind the curve, and they're not really behind the curve, but I think it was just a way of trying to get themselves on this path to a preemptive strategy.
That's the global market action that we have. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news today. First up, Vamakshi joins in to get the market cues we need to watch out for. Vamakshi, good morning. Another day, another record, but we could not sustain.
Well, absolutely, Hormaz, you rightly put it. In fact, the markets opened on a positive note in line with global cues, but the Nifty and Sensex hit record highs intraday, but subsequently faced some selling pressure. And this trend has been consistent over the last couple of days, wherein Nifty makes a record high and then reverses course. In fact, indices, despite that, ended marginally in the green. The Nifty Bank too witnessed a similar trend. Nifty Bank retracted after almost touching its record highs. Nifty Bank ended comfortably above the 53,000 mark. HDFC Bank and Kotak Bank contributed the most to its gain. The broader indices, however, continued to remain in pain. The Nifty mid-cap as well as small-cap indices were down for the third straight session, with the losses yesterday amplified on the Nifty small-cap index. Vodafone Idea and Indus Tower saw a very sharp fall in the trading session yesterday after the SC rejected plea on the AGR dues. Vodafone Idea posted the biggest single-day fall since Jan 2022, while Indus Towers posted the biggest single-day fall since June 4th. The US markets, on the other hand, saw very strong momentum. All three benchmark indices ended the session on a very strong note. S&P 500 as well as Dow Jones hit record highs yesterday, and the Nasdaq Composite too advanced nearly 2.5%. So that is how the markets performed yesterday. But as far as the cues today are concerned, Bank of Japan's interest rate decision will be an important one to watch out for. The Asian markets are mostly trading higher, and the GIFT Nifty too is suggesting a positive start to the trading session today.
Positive start indeed. We'll see if those gains sustain though. Vamakshi, thanks a lot for that. Over to Winnie now, who would list out the stocks you need to watch out for this morning. Winnie, good morning. What's on your list?
Good morning. I'm going to start with Phoenix Mills because its arm, Casper Realty, has emerged as the highest bidder, and this is for centric property plots which are there in Mohali in Punjab. Combined value of that is approximately 891 crores, so important to watch out for that. Reliance Infra, the board has approved fundraising plans of around 3,000 crores via QIP. This is going to be the issuance of 12.56 crore shares or warrants that we should be watching out for at a price of 240 rupees per share, amounting to 3,014 crores. Moving on, NTPC, the board has approved investment plans, couple of investment plans in its plans. One is around an 11,000 crore investment and the other is around a 9,700 crore investment. So surely that capex plan is something we are watching out for. IFL Finance, RBI has lifted restrictions that were imposed on the gold loan business of the company. So yes, after a long time, we'll be seeing these restrictions are going to be lifted. So positive for IFL Finance. EMS Limited, they've received a tender from Kolkata Municipal Corporation for an order value of around 681 crores. Keep an eye out on that. And two pharma names, we have Zydus as well as Lupin, that's going to be in focus after the US Court of Appeals for the Federal Circuit has vacated US District Court's judgment that favored the generic companies. So maybe some bit of a pressure on Zydus as well as Lupin because they launched this drug which was patented at risk recently. So keeping an eye on that. Lastly, board meetings. Godfrey Phillips board is going to be meeting for bonus issue. So keep an eye on that. And Mankind Pharma board meeting for fundraising plans. So important to watch out for all these stocks.
Vinny, thanks a lot for those updates. And lastly, Mangalam is joining in with cues from the FNO space. Mangalam, good morning. It's been a range-bound trade for the Nifty, but the Nifty Bank has been the one to watch.
The Nifty Bank has done extremely well, and overnight cues coming in from Wall Street, powering the GIFT Nifty ahead as well. So that's the one that should come up for you on the screen right now. Saw a great amount of traction on all the frontline Wall Street indices, and a 50-point uptick is what the GIFT Nifty is indicating. If you look at the trade yesterday as well, the Nifty, while it gave up from highs, it did still manage to close above the 25,400 mark. And for the Nifty Bank as well, it managed to hold on to that 53,000 mark itself. What was interesting is that the mid-caps, which continued to underperform, did that yesterday as well. But towards the last hour, if you look at the intraday chart, you would see that there was some recovery from the lows, so not all was lost. And add to that, we had the India VIX, post-event saw a bit of a decline as well. So those are a couple of factors that worked out. What I like the most about trade today is that a lot of the excesses, some part of it may be taken out right now, because the FIs who are building their positions gradually on the long side have now decided to, unwind some of those positions. Yesterday, we saw 924 crore worth net sell in index futures by the FIs, where they unwound about 7,000 contracts and added about 7,000 contracts on the short side as well. And as a result of which, while they're still net long to the tune of 2.23 lakh contracts, it's a slight moderation. That's a positive. The other positive is that the FII selling was lapped up by the clients. Now, clients and HNIs are basically the ones who know the near-term pulse of the market. They added about 17,000 long contracts, and this at a time when they are net short on the index as well. For the next week's expiry, it is the 25,500 mark, which will be a bit of a fulcrum, because we've seen action on both the 25,500 call and the 25,500 put. And if you look at, what the option writers are expecting for the next 1 week is a broad range of 25,350 on the Nifty at the lower level to about 25,650 at the upper level itself. The index, like you pointed out, is the Nifty Bank to watch out for. Yesterday went perilously close to its all-time high. Can it, close that loop today or not is the big question, because this week has definitely belonged to the banks. The Nifty Bank is up 2% this week at a time where the broader markets have seen a decline of 2 to 3% at the index level itself. And speaking about the broader market stocks itself, just watch out for Chambal Fertilizers, National Aluminium, which is NALCO, and SAIL. All three of them have entered FNO ban, and out of FNO ban is Balrampur Chini.
Nifty Bank, the week has definitely belonged to the banking stocks. Mangalam, thanks a lot for that update. Thanks. Well, it's time for a short break here on Power Breakfast. Up next, the RBI has lifted restrictions imposed on IFL Finance's gold loan business. We get you more on this on the other side. Stay tuned. We'll be right back. Welcome back. Now, in some relief for IFL Finance, the Reserve Bank of India has lifted restrictions on the company's gold loan businesses. Ritu is now joining in to tell us more on that. Ritu, good morning. Finally, some good news for IFL Finance.
Yes, Hormaz, and it's coming after a 6-month ban. So yes, big relief for IFL, with RBI lifting the restrictions on its gold loan business. And that means that IFL Finance can now resume sanctioning, dispersal, assignment, securitization, or the sale of gold loans after this ban. Remember, RBI had first placed restrictions on the company's gold loan business on the 4th of March because of material supervisory concerns, and that included deviations in the certification of purity of gold, breaches in loan-to-value ratio, cash dispersal, and collection of loans in excess of the limit allowed, and so on. Now, the impact of the ban has been significant. Their gold loan AUM shrank from 26,000 crores before the RBI ban to less than half, about 12,162 crores by August. That's a 53% drop in just 5 months. Their share of gold loans in the consolidated AUM dropped from 32% before the RBI action to 21% as of the first quarter, and more than 1 million customer accounts were closed during this period as well. In addition to this, there are about 12,000 employees that IIFL had across its gold loan branches, about 2,745 gold loan branches. And the prolonged ban had also raised some concerns that there could be layoffs if this were to continue. So the lifting of these restrictions, it removes key overhang on the company and also its stock, which has lost about 14.5% since the ban was first imposed.
Ritu, thanks a lot for that. We'll keep an eye out on IFL Finance, of course, possibly the stock of this morning. Time to get you a CNBC TV8 exclusive. Earlier, we spoke to Chris Wood of Jefferies, who said that he was surprised at the 50 basis point cut taken by the Fed. But he also added that he did not expect the Reserve Bank to aggressively cut rates in India. He also discussed his top sectoral bets in the Indian markets. Listen into a slice of that conversation.
But the key point here is what the Federal Reserve believes is the neutral rate. So my guess that is probably in the 3 to 3.5% range. So even if the US achieves the soft landing, so to speak, we're probably going to be at between 3.5 by the middle of next year. But in terms of the short term, I'm surprised I'm surprised it's 50 basis points. Anybody who can read and listen is contrary to the messaging going into the meetings, so my guess at the margin is political. I mean, all Asian central banks can cut rates today, including the RBI. But my colleagues here, we believe the RBI is not going to be aggressively cutting. I.e., the RBI is going to behave in a different way from the Fed. And actually, the RBI in recent months has been actually counter-cyclical because they've been doing these preemptive regulatory measures as regards the banking system. And so I would assume the RBI will cut rates once before the end of the year, but I could be wrong. I've got 19% in real estate stocks in my India portfolio.
Okay.
Now,
what else have you?
If I was starting the portfolio today, I might be a bit nervous putting 19%. But given the fact I have 19% that done well already, I'm not going to actually reduce them.
Okay.
But if I want to have a more cash, let's say I can't own cash, but I wanted to be more tactically cautious because I've got more short-term tactical considerations, and you want to own the stocks which are more neo-cash proxies, which I would say are like the banks. The whole infrastructure story here in India, the energy story, these seem to be at the centre of the action, at the centre of the capex cycle.
Chris Wood there in an exclusive conversation with CNBC TV8. Time for a short break. Up next, we get you cues from the commodity space. Stay tuned, back on the other side. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. It seems that there is finally some profit booking in gold.
Oh, well, yes, but not too far away from its all-time highs. 2,600 is an all-time high, and we seem to be holding around that $25.70, $25.80 a ounce kind of mark. So we're just about $20 away from those all-time highs that we saw in this week itself. Well, the gains also have come back in case of crude oil prices. 74.5 is a two-week highs that we saw in case of crude prices. Also, with the geopolitical tensions and Middle East yet again erupting in an escalation, seems to be adding premium to prices. We also have seen gains come back in case of metals. You have copper now trading at a 2-month highs, steel prices trading at a 3-week highs, and there is also gain hormones that we've seen in case of sugar prices. From a low of almost 19.5, we are trading at around 22 cents a pound. Strong gains on the back of Brazil drought and fires there, and India, even as it is looking at a good crop, is not going to export. It's something that's taking the global sugar prices much on the higher side. So that one also trading at multi-week highs.
Manisha, thanks a lot for that update. Sugar prices surging to a 5-month high there. Now, the much anticipated iPhone 16 has hit the Indian market today. Now, eager customers have already lined up outside the Apple store in Mumbai for the new iPhone 16 series, which was unveiled on the 9th of September during Apple's Glow Time event. Now, the new series includes the iPhone 16 Plus, the iPhone 16 Pro, and the iPhone 16 Pro Max. Now, the launch follows a pre-order phase that began on the 13th of September, and the iPhone 16 will come in 3 storage options: 128 GB, 256 GB, and 512 GB. The prices start at just 79,900 rupees for the base model, rising to 89,900 and 1,09,900 for the higher storage variants. iPhone enthusiasts queuing outside the Apple store there. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call up next to set you up for today's trade.